Bitcoin has just surged past the $80,000 mark, igniting a wave of investor optimism. However, this rally comes amidst volatile macroeconomic and policy uncertainties. Here's a comprehensive look at what has unfolded and what it means for the crypto landscape. Looking ahead, the trajectory of Bitcoin remains uncertain but filled with potential. Recently, Bitcoin has surged past the $80,000 threshold, prompting excitement among traders and investors. This surge is attributed to a combination of factors, including increased institutional interest and a growing acceptance of cryptocurrencies in traditional financial systems. Major financial institutions, including banks and investment firms, are now incorporating Bitcoin into their portfolios, indicating a shift in perception. The rise in Bitcoin's value has sparked discussions about its role as a hedge against inflation and economic instability, especially amid ongoing global economic challenges. Market experts suggest that the next few days will be critical in determining whether this rally is a sustainable trend or merely a temporary volatility spike. The cryptocurrency market is notoriously sensitive to macroeconomic conditions, with Bitcoin often reacting sharply to news about interest rates and inflation. If unfavorable economic news emerges, such as rising inflation rates or tightening monetary policy, Bitcoin could quickly relinquish its recent gains. This highlights the delicate balance of the current market structure, where external economic indicators play a significant role in shaping investor sentiment. Additionally, upcoming announcements from key financial institutions, including the Federal Reserve, will be closely watched for their potential impact on risk appetite. The pivotal question for traders and investors alike is whether this surge marks the beginning of a new bull market for Bitcoin or if it will fade away, leaving the market to navigate lingering uncertainties. Should institutional investments continue to flow and retail interest maintain momentum, Bitcoin could solidify its position as a leading asset in the digital economy. Conversely, a lack of sustained buying pressure could indicate a reversion to previous price levels, making the next few weeks crucial for Bitcoin's future. The rise of Bitcoin to its current position has been influenced by a series of developments over the past months. Investor confidence has been gradually building, supported by a wave of institutional interest and regulatory clarity. BlackRock's recent expansion of cryptocurrency products in Europe marks a significant milestone, as it demonstrates the asset manager's commitment to integrating digital assets into mainstream finance. This move is particularly noteworthy given BlackRock's stature as one of the world's largest asset managers, which lends credibility to the legitimacy of cryptocurrencies. Additionally, the ongoing SEC review of crypto regulations is fostering a more structured environment, encouraging both institutional and retail investors to engage with cryptocurrencies. The regulatory clarity aims to protect investors while promoting innovation in the sector. Deutsche Börse's foray into crypto custody and settlement further highlights this trend, as traditional financial institutions adapt to the evolving landscape of digital finance. These developments reflect a growing acceptance of cryptocurrency within traditional finance, indicating a shift away from viewing Bitcoin solely as a speculative asset. Historical context reveals that previous rallies often relied heavily on retail investor speculation, characterized by volatility and rapid price fluctuations. However, the current landscape is marked by a more stable foundation due to institutional participation, which tends to bring more discipline and less speculative frenzy to the market. This evolution in market dynamics has created a structure where Bitcoin's price is increasingly influenced by external macroeconomic factors, such as inflation rates and geopolitical tensions. Understanding this backdrop is essential for grasping the nuances of Bitcoin's current rally. As institutional interest grows and regulatory frameworks solidify, Bitcoin is poised to transform into a more reliable asset class, potentially reshaping investment strategies across the globe. Bitcoin has recently surged past the critical $80,000 mark, a milestone that carries significant implications for the cryptocurrency market and investors alike. This upward movement not only sets the tone for Bitcoin itself, but also influences the entire crypto ecosystem, including altcoins, exchange-traded funds, ETFs, and crypto equities. Historically, when Bitcoin breaches key psychological levels, it often triggers momentum buying, leading to rapid price escalations. This surge is particularly noteworthy as it directly impacts millions of investors who hold Bitcoin and its various derivatives, highlighting the interconnectedness of the crypto market. The current bullish sentiment in the market is palpable, with many altcoins witnessing substantial price increases in tandem with Bitcoin's rise. This phenomenon underscores Bitcoin's role as a market leader, where its performance can dictate the overall health of the cryptocurrency landscape. To fully appreciate this moment, it is crucial to consider the backdrop of macroeconomic uncertainty that looms over this bullish trend. The cryptocurrency markets are notoriously sensitive to global economic conditions, and adverse news could swiftly reverse recent gains, leading to significant losses for investors. Factors such as inflation rates, interest rates, and geopolitical tensions can deeply impact market sentiment and investor confidence. For the average investor, this situation serves as a stark reminder of the importance of understanding not only the technical factors driving Bitcoin's price, but also the broader economic context. As institutional investors become increasingly involved in the cryptocurrency space, the market is likely to experience heightened volatility. This institutional interest can lead to larger price swings, as these entities often possess significant capital and can influence market dynamics more than retail investors. The increased participation of institutional players signals a growing acceptance of cryptocurrencies in mainstream finance, potentially leading to a more mature market. Looking ahead, the outlook for Bitcoin and the broader cryptocurrency market remains complex. While the current upward momentum presents opportunities for profit, it also carries inherent risks tied to economic indicators and potential regulatory changes. Investors must remain vigilant, continuously monitoring both crypto-specific developments and macroeconomic trends that could affect market stability. As Bitcoin navigates this critical juncture, understanding the interplay between these factors will be vital for anyone looking to capitalize on future market movements, particularly as the landscape continues to evolve. On June 11, 2026, Bitcoin's price surged above the $80,000 level, marking a significant milestone in its market trajectory. This unprecedented rally has been attributed to strong demand and renewed confidence from investors. By midday, Bitcoin was trading at approximately $80,500, following a weekend where it gained over 15% in value. Key figures in the financial sector, including analysts from major investment firms, have noted this price movement as a pivotal moment for cryptocurrency. Notably, the demand surge has been linked to a combination of institutional interest and retail investor enthusiasm. The backdrop to this rally is crucial for understanding its implications. Over the past year, Bitcoin has faced considerable volatility, influenced by regulatory discussions in the United States and evolving monetary policies globally. However, this latest surge stands out due to the unprecedented level of institutional participation. Large financial institutions, once skeptical, are now integrating Bitcoin into their portfolios, viewing it as a hedge against inflation and a viable asset class. This shift in perception marks a turning point in how Bitcoin is viewed within the broader financial ecosystem. The impact of this price increase is multifaceted. Analysts emphasize that breaking through the $80,000 barrier could trigger further buying momentum. This potential for upward movement might lead to the liquidation of short positions, which could amplify the price surge even further. Moreover, as Bitcoin attracts additional media attention, it is likely to draw in more investment capital into the crypto space, potentially leading to a broader market rally. This increase in participation could also inspire smaller companies to explore blockchain technology, potentially fostering innovation across sectors. Looking ahead, the outlook for Bitcoin appears optimistic, especially if the current trends continue. Analysts are closely monitoring the regulatory landscape, as any positive developments could bolster investor confidence further. Additionally, the growing adoption of Bitcoin by institutional investors suggests that the cryptocurrency is becoming more entrenched in mainstream finance. If these trends hold, Bitcoin may not only maintain its momentum, but could also pave the way for new all-time highs in the coming months. The financial landscape is evolving, and with it, Bitcoin's role as a cornerstone of digital finance is becoming increasingly undeniable. As we analyze Bitcoin's current rally, the question remains, is this a sustainable trend or just another volatility spike in a fragile market? Share your thoughts in the comments below, and don't forget to subscribe for daily deep dives into the world of cryptocurrency.